let's see if we can start putting this together. So there are two basic sections in the operating cash. Well, you really could say three. The first section is making sure you've got net income here. That's number one. That's always your starting point. Always, always, always. Remember, we're looking at the indirect method. And since you have to do this reconciliation as a disclosure, whether you use the direct method or you just report this, if you're using indirect method, this has to happen. This little section always has to happen. So we've got two additional areas that have to be accounted for or displayed in the operating cash flow section. One of those sections are non-cash income, expense, gains, losses, etc. Things that are affecting our proxy but have no impact on operating cash flows. There's no cash involved. Or if there is a income or expense, it's already taken care of. The cash related to that is already taken care of in investing cash flows or in financing cash flows. And we saw that when we were looking at sales of property, plant, and equipment. Any gains or losses, those are coming into the income statement. But those gains or losses are not operating gains or losses. Those also have to be accounted for or disclosed in this particular section. The other section, and if you looked at a previous video, you've seen this, are the net changes in my operating accrual accounts, my operating liabilities, and my operating assets. And what we're doing is we're making adjustments to the proxy based on net increases or decreases in either of these accounts. And this little 2x2 helps you understand that. So here we are going to have changes in operating accrual accounts. So those are the two sections. All right, so let's think about let's think about the top section. So in the top section, some items that you will likely see. You may not always see them, but you may likely see them. Depreciation and amortization. Right? Depreciation and amortization are lowering net income, but that's a non-cash expense. Income's lower. Remember, this is our proxy to our starting point to come to operating cash flows, but this expense is not a cash expense. Right? It's an allocation of previous things, whether that's property, plant, and equipment, or amortization of premium or discount. It's generally going to be an add back, unless of course you're amortizing a discount, then you might have to subtract that, right? So it's going to depend on what the direction is. You have to take a look at your net depreciation and amortization and see, is it decreasing income? If it's decreasing income, then you need to add it back. Different kinds of reserve expenses, whether that's the bad debt expense or the obsolescence expense due to inventory, where we're writing it down to lower of cost or net realizable value, right? I mean, these reserve expenses these also need to be accounted for. Now, they may not be material enough to disclose by themselves as a separate line item. but they could be. Right? And any of those reserve expenses we're going to add back. Any kinds of losses, whether that is goodwill impairment or an impairment of a property, plant, and equipment, or a loss related to selling or basically throwing away property, plant, and equipment. Just stopping it. So losses that are not they're not part of normal operations, right? Any losses that take place are likely accounted for as far as the cash is concerned down in financing or investing. And in some cases where you're doing impairment, there is no cash involved. We're just writing down an asset. Those losses have to be, it's in net income. We've got to adjust those. So again, we're going to add those back. Gains, not as frequent, right? Because we're usually not selling a lot of property, plant, and equipment, etc. But any gains, those gains are increasing net income. Well, guess what? Those gains are not part of operations. Those gains are cash flows, incoming cash down in investing activities. So for those gains, we want to subtract those gains. Other expenses that you might see. For example, stock compensation expense. Is there any cash associated with that? We want to add that back. And one more. I know it looks like I'm running out of room, but I can still fit it in here. Deferred tax expense or benefit. Right? You learned about this in the previous accounting class. Right? There's no cash involved with this. We're not paying any cash. It's not part of an operating account. It's not part of an operating accrual like current tax liability, where we will pay. There is cash coming in and out of that. This is all non-cash. This is going to be, if it's an expense, we want to add it back, and if it's a benefit, we want to subtract it. So that's kind of dealing with the top part of the operating cash flow statement. Another recording, we're going to go and we're going to take a look at this bottom part, the changes in operating accrual accounts.